In this video, I want to show and walk you through the Pipsurfer settings. So that way you have an understanding of the different components of Pipsurfer, because I know with Pipsurfer, you can have a lot of different customizations. In a way, if you look at the settings, you can be your own developer. So Pipsurfer can be more of a platform than just a cookie cutter trading system. And that's the goal with Pipsurfer. So let's get right into it. So we're going to go from top to bottom. So that way you have understanding. So a magic number is a way that an EA recognizes that a trade that the EA makes is from the EA. So what happens, the reason it's there is that you can make a trade with the EA, or EA can take a trade, and the EA will only manage trades with that identification number, which would be the magic number. For the reason being, if you place your own trade, it doesn't recognize that trade as a trade for the EA to manage. So if you place a manual trade, it won't manage that trade. So you would have to, that trade would be completely manual. So for people who like to have the EA trade and then also trade on top of what the EA is doing on the same account, it doesn't, the EA won't confuse what's going on that account. So trading strategy, very, very simple to understand. There's 3 trading strategies that we have on Pipsurfer currently. And the first one is going to be a conservative strategy. So this strategy here may not trigger so many different trades. And what I can do is I can give you an example on this pair of what the strategy looks like, or as far as where it takes trades. And this indicator I do have as well on the marketplace. So if you want to have access to it and see where strategy 1 will take trades, that way you can do your testing, then you can see here. So this is strategy 1. So strategy 1 is not going to take a whole lot of trades. So strategy 1, you may get a couple trades a day. You may get a trade a day, just depending on what's going on. It's looking for deep pullbacks in the market. So you see it only really takes trades during a deep pullback. So it takes, the market has to stay in trend, give a nice pullback rejection, and then it'll take that trade. And it's even picky on which pullbacks it takes. Like these little quick impulsive pullbacks, not a lot of whole price action, so it's not going to take that. So that's why strategy 1 is very conservative. You may not get a lot of trades with strategy 1, but the trades you do get tend to be pretty quality trades. And that's what I like about strategy 1 for people who don't want to get into a lot of trades, especially people who like to swing trade. That's a great strategy for them. So going into strategy 2 is a moderate trading system. So it's going to use institutional concepts within its trading philosophy. If I go to strategy 2, I believe this one would be the indicator version of strategy 2, which is also available in the marketplace. Let me adjust it to the current. Let me adjust strategy 2 to the current settings for Pipsurfer. So strategy 2 settings, see if it's all correct. So I believe strategy 2 is 35.65. That's what it is. So, and 16, and this one would be 5 and 3. No, this one's still at 4. So that, now I just matched it up to what you would see. Now, the green arrows, green and red, is what's going to be strategy 2. So strategy 2 is going to give you more entries. It's going to give you more opportunities to trade. And a lot of times try to catch the trade on the wick. So when you're on strategy 2, you'll see that a lot of times, if you're on a buy candle, it's going to be, the entry is going to happen on the lower side of that candle. And as you can see, there's more entries on strategy 2. Now, strategy 3 is just a combination of using both strategy 1 plus 2 at the same time. So now, with both of them enabled, you now see that you have, potentially more trade entries, different things like that. So, like, say if we go to one of my favorite pairs on Pipsurfer, GBP USD. You see it catches, some pretty good trades on that with GBP USD. So having both 1 and 2 combined, like this is a strategy 2 entry, this is a strategy 1 entry. You would have caught some good levels on both trades by having both enabled. But like I said, it could, because it's more exposure to the market, this could be considered a more aggressive trading strategy. So that's for the entry strategies. The other thing would be the template loader. Now, there's a note above it saying the settings below will only be used if the custom is selected. If custom is selected. So what that means is when you have custom, then you'll have access to trade these. Now, the stop loss is the only exception. The stop loss you will always have full control of for risk management purposes. So you could, on any tier, you'll be able to change the stop loss. 0 just means it's not going to use a stop loss. It's just going to use its mitigation risk management. But if you do a stop loss, like say 100 pips, that will go from the first trade that was open. So level 0, 100 pips back and drawdown, and you will have your stop loss hit. Now, with template loader, there's multiple templates you could have. So you have FX tier 1, FX tier 2, FX tier 3, scout mode, and gold miner. So the FX tiers, the Forex tiers, are settings that are for certain pairs. So pairs meaning like, the symbols, Euro USD, GBP USD. So for FX tier 1, those are going to be more of your lower volume pairs or lower volatility pairs. So those pairs are going to be like Euro CHF, AUD CAD, Euro GBP, different pairs like that, AUD NZD, pairs that don't move probably more than 60 to 70 pips a day. Like 60 to 70 pips is this upper limit of price movement. So these settings are set for that. Tier 2, going to be your mid-volume pairs. So pairs like Euro USD or AUD JPY or USD CAD or Swiss franc Japanese yen, stuff like that, to where, maybe their range is between 60 and 110 pips per day. Then you're going to have FX tier 3, which are your high volatility pairs. So your pairs like a lot of your Great Britain pairs, GBP USD, GBP CAD, GBP JPY, or Euro AUD. So those are going to be for pairs like that move more than 110 pips per day on average. So the risk management settings within these three tiers are for those trading pairs. Scout mode is a mode to where it's going to look to profit faster, just like what it says, scout mode. So it's not going to look for 20, 30, 40 pip take profits like the FX tiers would. It would probably look for anywhere between 8 to 20 pips profit, just depending on what's going on in the market. Gold miner is a FX tier that's designed for gold, because gold has different pip levels, different volatilities in the Forex pairs. So gold miner is going to be designed for managing on gold with the pip count that gold has. Maximum allowed spread means that if your spread on your trading is too high, like above this one set to 4.4 pips. So if the spread is higher than 4.4 pips or points, depending on how your broker identifies spread, it's not going to open a trade, because it doesn't want you to pay over a certain amount in spread to place your trades. It's a form of risk management. Now, the minimum stochastic signals for buy and sell is going to be where for strategy 1, it's going to filter out trades. So stochastic is one of the many conditions that strategy one has within its trading algorithm. And you can make strategy one more conservative by increasing how high or overbought a pair has to be before looking for a trade, or decreasing how oversold a pair has to be before looking for a buy trade. So if you know a stochastic, and I can pull that up real quick, just so you have an understanding. We'll just pull this. All right. That's somewhat it. So when the markets tend to be higher in a range, you'll see it's overbought. If it's lower, on the lower side of things, it'll be oversold. So this was a strategy one trade. Notice how at least the stochastic was above 55, because I think that's the setting for this particular indicator. Going to the next part of it, you have distance in pips. So first range is going to be where if you open a trade, let's say this trade opens here. So you got this trade that opened, and it opened at that level. Let's say it goes into drawdown. And what will happen, 45 pips into drawdown, which meaning 45 pips higher on a sell, and I'll just kind of put approximately 45 pips, be a little bit higher. Approximately 45 pips higher, like say it goes to the drawdown, is going to place a second trade to try to mitigate that position. So what that means is it'll, instead of looking for a take profit maybe down here from the first trade, because there's take profit settings based off the first trade, it will adjust and kind of link the two trades together to give it a better chance or a different area for a take profit. So instead of the take profit possibly being down here, it would put it up here, which would be a higher chance of it retracing in that level. So the range just simply means when the second trade will open after the first entry, the second level. So after range, you have range multiplier. So what that means is on range multiplier, it will adjust. So range multiplier will take the 45 pips. So you got from level 0, which is the first trade, to level 1, which is the second trade. After level 1, it's going to do a range multiplier. So what that means is, for if it was to go continuing to draw down, it will multiply 45 times 1.35 and get a number, and that number will be the second entry, or the third entry actually. So if this multiplied and equaled 160 or 65 pips back from the second entry, the third entry to open, and it would kind of continue on for the third, fourth, fifth. It would always multiply by 1.35. You could change this as well. You can go down to 1.2. You can kind of do whatever you want there. Trade comment is just the notes that MetaTrader 4 is going to show you to let you know that the trade, when you look at the trade, is a Pipsurfer EA trade. So this is for strategy 2, going into that setting. Strategy 2 is the second strategy for Pipsurfer, the more moderate strategy. The price action is basically, the strategy 2 goes highly off of price action and institutional interest. So for people that are new to trading, that just basically means it's going to look more at price over like indicators or indicator readings. So the sensitivity level is going to allow for how much it's going to pay attention to. So if you have a lower sensitivity level, that means it's not going to look at too much price action in a period. It'll look at a lower number. If you do like 10, it's going to look at a good number of candles to determine if the price action conditions are being met within that range of candles. So it's a little bit more complicated as far as exactly what it looks for, but it's just more so looking for different supply and demand zones within a certain set of candles. Now, the range sensitivity is also going to be a level where it's looking at the volatility within a range. So when you have a higher range sensitivity, it's going to wait for more volatility in a area of price before looking for a trade. I would recommend that you can go higher or lower, but the optimal range with range sensitivity setting is going to be between 15 and 35 as far as the number. So between 10 and 35 as far as the number. You can go higher or lower, but the results may not match up what you like outside of those ranges. Under 10 might be too sensitive, and over 10 you may miss a lot of. Over 35 you may miss a lot of trades. But if you do get a trade over 35, it's going to be probably going to be a really quality trade. Mitigation pip level is going to look at the range plus the price action and look for certain, you could maybe call it a stop hunt or different things like that. And it has a metric for how it measures a stop hunt. So each setting is based off of what type of trading you're doing, because that metric for stop hunts is going to change, or mitigation or institutional candles are going to change based off of what time frames you're trading on or what type of market you're trading in. That's why you have scalp, Forex, swing trading, and gold, which is what strategy 2 supports currently. Stochastic is going to be the same as the strategy 1. The closer to overbought, oversold, the more conservative. The further away from overbought, oversold. So say if you're okay if, like say here, like at 70, it can take a buy signal. That would be very lenient of a rule. So if you are okay with any buy that's below 70 on the stock market, on the stochastic, then that would be a lenient rule, versus a buy has to get below 30. That would be pretty conservative. So, and vice versa for sales. So you can set that up. Deviations also going to be a part of the range metric as well. Deviation is going to measure basically a range within a certain number of bars, calculate a upper and lower kind of support resistance zone, and put that into the logic for strategy 2. Lot size settings. Lot size settings, you're going to basically have a setting for your risk management. So lot size method. So the lot size is going to be where if you have a fixed lot size, it's going to follow this one. If you set it towards auto from balance, which is the other setting, it's going to take whatever you put here. So this default setting is 1,500. So the starting lot size would be 0.1 for every 1,500. So once you get to 3,000 in this setting, that's what it would start to look for, 0.2 as a starting lot size. And then a lot multiplier would coincide with your levels. So when you're level 1, level 2, level 3, every level, the lot size will be multiplied by 1.2 to get whatever the lot size that is going to open up in. Risk management. So you have risk management. Max active signals at one time means that Pipsurfer is not going to open more than 4 pairs on an account with this symbol. So what this means is we're on GBP USD currently. Let's say 4 other trades are happening within your account, and GBP USD Pipsurfer sees an opportunity. If there's 4 pairs being traded already on your account, it's not going to open a trade. So that's a way of making sure that you don't get in too many trades at once. You can change the setting. You can even get more advanced with it and say on GBP USD, I don't care if there's 4 pairs already trading. I want it to trade anyway. So what you can do is you can increase it to like 6 or 7, to where it will let Pipsurfer know, even if there's 4 trades trading, like say on your other pairs, you have this setting at 4, and on GBP USD, you have this setting even at 5. It don't even have to be 7. That's like a slot. So what you're saying is you're going to have a slot open for GBP USD, and even if there's 4 trades happening on other pairs. So like you can prioritize certain Forex pairs like that. You can kind of just do it to where like, okay, if Euro USD is your favorite pair, you would give Euro USD the highest number. So you got GBP USD at 5. And if you want Euro USD to always trade no matter what, you would give Euro USD the highest number. So Euro USD would be at 6, and it will always enter a trade no matter what, no matter how many trades are happening on other pairs. To say like, you discover that you like Pipsurfer and how it trades a certain pair, you can do this to ensure that you don't miss out on a trade on that pair. Enable drawdown notifications. So that just basically means when your account gets up to a certain drawdown, it's going to give you a message in MetaTrader. Hey, drawdown notification, your account's at 30%, which is what this means, 30% drawdown. This is, pay close attention to this. So this is the enable close after max drawdown. These 4 settings are very, very important for your risk management. So enable close all after max drawdown. What that means is if a drawdown gets to a certain amount for your account or the symbol, like whichever you choose here. So right now it's set for only the symbol. So what that means is if you do enable close all and you hit true, if your account reaches 75% drawdown, or actually this pair reaches 75% drawdown on this one pair, it's going to close out all the trades on that pair. So what that means is GBP/USD has to cause 75% drawdown on your account. Now, if you set it to all symbols, what it's going to do is Pipsurfer is going to look at all the trades on your account. And if you have it to where 75% is going to close out the trade on whatever pair you have true enabled on, it's going to close out the trade on that pair. Like this is a pair specific setting, but this on all symbols is the account specific setting. So this is going to read the account. If the account gets too high and you have true enabled on that pair, it's going to close that pair's trades on this level of 75% drawdown. So you can manage it different ways. So some people, what they would do is they would put it at only the symbol. And let's say you don't want GBP/USD to cause more than 8% of drawdown. If it goes more than 8% of drawdown on this pair, then it's going to close out of all the GBP/USD trades at 8% drawdown. Some people do that so that minimizes the risk on a particular pair. You can come up with your own Setting, the only reason I have it at a high setting is because I wanted to give it freedom to trade, and I didn't want to limit where your risk management threshold is. So I just put a high level of threshold. You can dial in, you can dial down on it, and make it to where it's more conservative. Minimum drawdown and pause trading means once your account is an account level setting, and once your account reaches 45% drawdown, then it's not going to trade on this pair. Like any pair that has 45% drawdown on your Pipsurfer account, it'll stop trading on that pair. Now, if you always want a certain pair to trade, all you would have to do is increase this. So this just means on GBP/USD, I'm going to want it to trade GBP/USD all the way up until it gets to 65% drawdown. And, that's as a worst case scenario. It's not going to, it's chances that you have drawdown spikes, but Pipsurfer generally doesn't always operate with a high drawdown. It usually does pretty well on keeping it to a manageable level. Correlation settings. Correlations is just a way to where you're not trading too many of the same type of pairs or similar pairs that move at the same time. So if you have it set to 2, what that means is if you have, let's say you have a trade open GBP/USD, and then you also have a trade open at Euro/USD, it's probably not going to open a trade on AUD/USD because that's another similar pair because it has USD at the end. It's a correlating pair. So that way, like say you're right, yeah, that would be great. Like say Pipsurfer has a winning trade. Let's say Pipsurfer has a losing trade. You don't want to be losing on all 3 trades at the same time because those are correlating trades and Pipsurfer picked the wrong side of it. So that's what the filter is for, so you don't get in too many of those correlated pairs. I would recommend too, doing one, may make it very, very conservative. He'll still trade, but it may take out maybe 30 to 40% of potential opportunities from going from 2 to 1. So I do like 2. Some people do 3 or 4 if they're more lenient. And a correlation threshold is just percentage value on how much it correlates by. So with this, if a pair moves alongside another pair 65% of the time or more, that's going to be considered a correlated pair in Pipsurfer's mind. So Pipsurfer's reading the correlation between all the pairs and having a percentage of when it's moving at the same time. And all that's built into it. So very, very complex to put together, but that one small setting is a very, very good risk management feature. Trailing stops, these are your basic risk management. So trailing stop loss, what that means is, as your pair or your trade, let's say you place a trade, gets into profit, there's a mechanism with MetaTrader to where you can move your stop loss from wherever it is to a certain number of pips behind. So trailing start, what that means is it's going to start to trail, and this is in pips at 28 pips. So you get 28 pips of profit, it's going to start to trail. Now, these settings are going to be built into the FX tiers and all this. So this is going to be only applicable if you do custom, both the trailing stop and the break even. So if you do custom, you'll be able to change it. But on the preset trading modes, it's already built in, and that's based off of testing of what gave the best results on those modes. But let's say you put it on custom, you enable trailing stop. You can also disable it by doing false. You enable trailing stop, trailing mode on all orders, which mean all levels that pair is, or GBP/USD is being traded on. So if you have custom, it's going to start to do a trailing stop loss at 28 pips. And what that means is the stop loss is going to move to plus 18 because you have 28, trail stop is 10. So the easiest way to understand where or how far up the stop loss is going to go, you're always going to take the trailing start and subtract it by the trailing step. So if it gets to 28 pips in profit, your stop loss is going to be at 18. Now, wherever, if price continues to go in your favor, let's say it gets to 30 pips in profit, it's going to move the trailing stop to 20 pips in profit. It's going to stay within a 10 pip range. Now, the only time that changes is when the trade starts to go against you. So let's say you go to 25 pips in profit, you lose a little bit of profit. That doesn't mean that the stop loss is going to move to 15% or 15 pips profit. It's going to stay at 20 because your highest profit reach was 30. So it's never going to move off where your highest profit reach was. So if you go to 30 pips in profit, and then the trade starts to reverse on you and it goes to 20 pips in profit, this Pipsurfer is going to take profit at 20 pips. That's to make that easier. Break-even settings, a little bit different. This is just going to move your stop loss in profit when it reaches a certain point. So in this setting, once your stop loss reaches 24 pips in profit, it's going to move your stop loss plus 16. So that way, no matter what, you've secured 16 pips in profit. Trading times is going to basically limit when trading is happening. So this would be all day for trading. You would actually, this would be all day for trading. And then for not trading, you have if you want to do a trading block. Right now, this is based off of military time. So trading block would be Eastern time as well. So the 16th hour of Eastern time would correlate in Central time to 5 o'clock, or in Eastern time to 4 o'clock, because it's the 16th hour, 4 o'clock p.m. And it won't trade at 4 o'clock p.m. Eastern all the way till 7 o'clock p.m. Eastern. So that's how you look at that. So that could be like your trading block. You can change it. If you put it at the same time, you won't have a trading block. So if you do both 16, there's no block period. So because the no trading period starts and stops at 16. So maybe on that minute you won't be able to trade, but nobody's going to really trade at 4 p.m. Eastern. So that would work. Everything else, you limit when you're trading, and it also has a news filter, which it'll read or know what the news is, and trade or not trade based off how close it is to news based off of that pair. So very intuitive. Dashboard settings, I wouldn't touch. Don't worry about that. And this is what, the Pipsurfer EA, these are all the different settings for Pipsurfer. So main thing is that you want to understand is the risk management settings, understanding that you can protect your account as much as you want, especially with the max allowed drawdown. A lot of times, a good practice is to sit down and think about what's your upper limit on a trade that you're willing to lose. And if you lose that amount, you don't want to go further into loss. So say if that's 8%, say if that's 5% on a pair, you won't let your trade go to 5%, or say you're more lenient and it's 20%. Whatever you like to do, you can put it at that, and you can protect your trade so you don't have, big drawn out trades from one pair. So that's something that I would very much pay attention to. Sit down, think about it for yourself, and be able to make the judgments you want. Hopefully this video helps, gives you a full walkthrough of our settings, and I'll see you at the next video.